If you've attended a back to school night or visited a college dorm recently, then you may know that September is College Savings Month. As a current grad student myself, I'm excited to host this informational series focused on college savings, sponsored by the Nasdaq Fund Network. Each week, we will hear from different thought leaders across the industry and dive into specific topics of interest in the 529 space. With that, I would like to welcome Paul Curley, Director of 529 and Able Research from ISS Market Intelligence. Paul, it's great to have you on. Welcome to Trade Talks.
Thank you, Jill, for the opportunity.
You got it. And can you share with the audience some of the top level trends in the 529 space for the past year? Are assets growing or shrinking?
529s in the college savings market continues to grow and has reached all-time assets and accounts. As of June 2021, there was over 15 million accounts investing over 464 billion in assets. Broadly speaking, about a third of the money coming in is coming in automatically from automatic contributions. And we've also seen an increase in one-time contributions from stimulus payments, but also child tax credits. Broadly speaking, families are putting their money to work and helping families to save.
Thanks for the high-level overview, Paul. Moving over to product, what do you see from a product perspective? Does anything particularly stand out to you?
Definitely. We've seen a broadening of the demographics, but also a broadening of the target market as well. And that aligns with the broadening of the 529 college savings plans being used just from college, but also over to student loans, apprenticeships, and K through 12 as well, aligning with that broadening of the target market and uses of 529 plans. We've also seen more and more plan disclosure agreements being used in multiple languages, but also initiatives by the states for low and moderate income households as well.
Moving over to distribution, what are some of the other trends you see in the distribution space, specifically within the direct sold and advisor sold space?
Great question, Jill, and thank you for asking. We've seen a broadening of the distribution overall. We see advisors finally, taking to heart 529s, from the perspective of helping them with their top one or two need from a family planning perspective. We've also seen the advisor sold channel improving the ease of doing the business. From the direct sold channel, we've seen a broadening of the target market and demographics. We've even seen an expansion not just from direct and advisor sold channel, but also over to the employer channel, as well as more states implement state tax deductions, but also there's been an expansion of gifting platforms, allowing 529s to be much more of a college financial planning goal. Last but not least, we've seen an increase in platforms, platforms such as different apps and digital platforms helping families to save and save efficiently. So overall, we've seen 529s becoming more and more broadly distributed.
And it's great to see that the industry is growing. What is the one opportunity you see impacting the future growth of the 529 space over the next 5 to 10 years?
It's been well documented that one of the larger hurdles for 529 plans is the awareness hurdle or awareness topic. So broadly speaking, based on our research, we've seen 56% of advisors confirm that advisors are seeing that awareness to be one of the major hurdles to the growth of 529 plans in the college savings market. That's why I'm excited that Nasdaq has really implemented a searchable ticker initiative to help more and more families save and save efficiently, be able to find the investments and the right investments for them, and broadly to help more people save and save efficiently. So thank you thank you Nasdaq for helping with that initiative, and much appreciated.
All right, and we appreciate having you on, Paul. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.